When I was 19 years old, I spent 3 months living in Southeast Asia. Now, prior to me going over to Southeast Asia, this was my sophomore year of college, my attention had pretty much, and my travel had pretty much only looked to Europe, some Central America, but pretty much the international community was Central America, maybe the Caribbean, and European countries. In fact, I spent a summer in Europe playing soccer, getting my butt kicked, and clearly getting how horrible on a global stage I was at soccer. But it wasn't until I was 19 that I discovered the other side of the planet, or part of the other side of the planet. And I spent 3 months over there with my school. There was 42 students. I was one of 42 students. And we would learn in the morning, take our classes. In the afternoon, we would explore. And it changed my view on life forever, my view of people, humanity. And I found that of all the countries I'd ever been to, and not by 19, but by the time I was 27, I would have been to 48 countries on this planet and lived in 6. And of all the places I've ever been, probably the place where I have felt most comfortable of myself, being by myself in the culture, is China. Which is interesting because I do not look Chinese, and the first time I went there, I spoke no Chinese. Then the subsequent, 2 dozen times I went there, and I lived in Hong Kong twice. I learned Mandarin, but still I felt very comfortable there. And it wasn't until I traveled there when I was 19 that I even knew, other than spinning a globe and knowing there's many countries, but really what was going on. And that really changed my perspective on the world. And that perspective getting changed is what I want to talk about with you today. Now, the theme for today is China. Hey, everybody, this is R.C. Peck, and I am a China-phile. And I want to talk to you about China, and I want to talk about maybe why you may become a China-phile. But the theme for this podcast is China. And I want to talk about how and why this may be the year of China. Even though it's been on a tear for 2 or 3 decades, people have forgotten about it. Most people don't even know where China is. They don't know that Taipei is not in China proper. That is in Taiwan. And the world will be opening up more and more to China. I want to show you why I think this with 4 specific charts that I have for you. So actually 5 charts. So the first chart I want to show you is the U.S. stock market, which is the red line, comparing it against the Chinese stock market, which is the blue line. Now, for the red line, I'm using the SPY ticker symbol, and for the blue line for China, I'm using FXI. So this is a 5-year chart going from the very beginning of 2010 to the very end of 2014, which is 5 years. And as you can see, the blue line, which is China, basically went nowhere. I mean, it went down 5 or 6% over 5 years. During the exact same time period, the U.S. stock market went up 76%, not including dividends. So just from capital appreciation, there is a huge difference there. 81, 82 percentage point difference between the Chinese stock market and the U.S.'s stock market. This is amazing. But then in 2015, something changed. And this is a bit of what I want to talk with you about. Here's the price chart of China against the U.S. for 2015. China is the blue line, and it's up about 24% for the year. And the red line is the U.S., and it's up about 3.5% for the year. So clearly something has changed. And it's my bet that China really has been working for the last 3 decades to continue to enter the world market, both on goods and services. And now they want to enter the world market with their stock market and their currency market and their bond market. And in order to do this, they have to make it very easy for billions or tens of billions or trillions of dollars to flow into China and flow out of China. Right now, the index that measures the international stock market in the world does not include China at all. The Morgan Stanley Composite Index does not include China at all. It has Japan in there, it has Europe in there, it has almost every other country in there, but it actually doesn't have any representation with China. And the reason is because they can't put China in there, even though China is the second largest economy in the world today, because money can't easily flow in and out of China. You can't easily buy or sell stocks. And I think China wants to change that fact. And that means they're going to have to really open up and link their exchanges, their markets to the world. And in fact, they're doing that right now. They have two major exchanges in China, and both of them are getting connected to the Hong Kong exchange, and they're making it easier for money to flow in and out. But here we have China. It's going up. It's up right now about 24% for the year. Relatively speaking, the U.S. is up, clearly 20% percentage points lower than that. So it's a significant difference. And this is, right now, it's pretty much the only game in town, which is what's really, really working well in global markets. So that first point is China has to make their stock market easily accessible to everyone. Excuse me. The second and third thing China needs to do is to make their currency/bond market very liquid and open. Basically, the currency and the bond market are the same thing. When other central banks in the world want to own the US dollar or the Japanese yen or the euro, they're not buying currency, they're actually buying short-term bonds. So they're really the same thing. But look at this. This is the yuan, which is the Chinese currency, against the yen. The yen is the third most traded currency on the planet. And since May of 2014, let's say that's a year, the yen is down 20% against the yuan. So the Chinese yuan is 20% stronger than the Japanese yen today. They want to prove to the world they are a strong currency and a strong economy and a strong stock market and a strong bond market. And they're showing that because they also want to be a reserve currency of the world. And they are not right now. There are only four reserve currencies of the world: the US dollar, the European euro, the British pound, and the Japanese yen. And they want to be the fifth. I doubt the International Monetary Fund would kick out one of those, but they want to be the fifth world currency. So then you say, okay, but that's the yen. The Japanese have been killing their currency. Give me something else. Well, here's the yuan against the euro over the last year, up 25% against the euro, the second most traded currency on the planet. And then you're like, all right, well, show me the US. So look at this. This is the yuan versus the US dollar going back 1, 2, 3, 4, 5 years. And even though there's been some shorter term volatility here in 2014, still over the last 5 years, the yuan is up 10% against the US dollar. This is the strongest fiat currency on the planet, and they want reserve status. They want the International Monetary Fund, the IMF, to say, okay, China, okay, yuan, you can be reserve status now too. That means they're going to have to open up their markets, their bond market, their currency market, their stock market. And here's the thing, when they do that, hundreds of billions of dollars will flow into China. Because like I said to you before, that Morgan Stanley Composite Index for the world Morgan Stanley Composite Index doesn't even include China right now. I don't think $200 billion will flow in all at once. It will happen over time, over a year, 2 years, 3 years. I don't know. But literally, this is a place, China, they want to be respected. They want to be respected in the bond market, in the currency market, in the stock market, on all the markets, all the stages of the world. And they've been on this plan for many years. And even when I went to China for the first time in 1989, I could already tell that the amount of entrepreneurism and capitalism that was going on in communist China was just absolutely amazing. So the question is, what's the takeaway from this? The takeaway is it's the year of China. The Chinese stock market, the Chinese currency, the Chinese bond market. And with more instability going on in the West and more stability going on in the East, it could very well be that their currency will continue to stay strong, the Chinese currency. Their stock market will continue to beat the Western stock markets. Their bond market, because it's linked, or the currency is linked to the bond, or the bond is linked to the currency, will continue to strengthen and appreciate, and maybe even gold. Right now, officially, China supposedly officially only has about 1,000 tons of gold, but they have not updated that number for many, 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 many years. And it's very likely that this year, possibly, they will come out on the world stage and say and show that they are the second largest holder of gold on the planet, right behind the US. And to be even bolder, this is my prediction, I'm guessing, they will let people audit their gold so they can prove to the world, hey, we have 4,000, 5,000 tons. Now, the US would never let anyone audit their gold because supposedly the US has 8,100 tons, though no one has seen it for many decades. So it could very well likely be that when China comes out and says we in fact have 4,000 or 5,000 tons and not the 1,000, that could put a very large spark to gold later in the year and could finally help that out. Hey guys, this is just another step in helping you protect and secure your portfolio and your future. Until next time, I'm RC Peck.